Hey, everybody, welcome to the daily update for Tuesday, April 28th. As you can tell, my voice is fucked. Uh, yeah, what started out as a little bit of hoarseness yesterday coming back from Houston is now full, I don't know, nasally congestion thing. I can't tell if I'm like here and I'm still going to get worse or I'm here and I'm starting to get better. I don't know. Anyway, so he says, clicking his tongue. Let's go and talk about some chart art. Today in the trading room, and also I think on Twitter. Is this sexy? Is this voice sexy? It's like a it's like a Kathleen Turner voice, which is usually not good for a guy. Um, I posted this both on Twitter and in the trading room, and I said something along the lines of, I always jinx myself on this, but is there a better weekly chart out there than Bros? And somebody said in the trading room, what did they say? Let's see. They said, I'm so bad at reading charts. To me, this chart looks like the price is continually knocking on the 47 level with consistently lower highs. Aren't the odds saying that it's most likely to break the 47 level and fall off a cliff? So, you're not bad at reading charts. Charts have a huge interpretive aspect to them. This is why I called this daily update the art of the chart. Yes, there are some technical things, but all we're trying to do is, and this is what we talked about a couple of weeks ago, we're trying to determine the probabilities, right? And based upon the chart pattern, what do we think the probabilities are of a move in a certain direction? So there is no right, wrong. There's no looking at what happened and having outcome bias and then coming back in and saying, like you have to do it in real time. So charts are open to interpretation to some extent, but then there's other things in charts that are pretty cut and dried. So let's just take a look at this chart and let me tell you what I'm seeing here. And again, no guarantee any of this is going to happen, but what I've seen is I've seen Bros hold this 47 level 1, 2, 3, 4, 5, 6, 7 times on a weekly basis. If you look at it on a daily basis, it's probably more than that, right? But the point is, that's a pretty strong level of support. Yes, it is put in a series of lower highs. It's compressing here. It's getting tighter and tighter and tighter. This is, excuse me, these are buyers and sellers getting into equilibrium. And at some point here, a new crop of buyers or a new crop of sellers is going to come in and overwhelm the existing homeostasis, equilibrium, and it's going to push this thing pretty aggressively in one direction or the other. Why do I think it looks good? Why do I think that that's likely in the upward direction? A couple of things. Most importantly, this action prior to the consolidation and the tightening here. This is what you would call a rounded bottom. This is the cup part of the cup and handle that William O'Neill would talk about from Investors Business Daily. Now, I'm not saying this is a cup and a handle. It's not. But this is usually a very bullish setup. It's not bullish in itself in that it doesn't just break and go higher, as you can see. In fact, if it did break and go higher, it would generally be a fail, or it would be more likely to fail. But what you're seeing here is you're seeing, weak longs getting worked off, weak shorts getting worked off, and somewhat of an accumulation phase here. And then this is that consolidation. And so the idea is if you can break this area here, and certainly if you can break above this pivot, you're going to continue higher. And when I look at this and say this is a good chart, I don't mean just like for a breakout for a couple of days. I mean, like if this thing goes, you could literally measure the high to the low of this cup. So that's like 82 to 23. So let's just call it 22. So that's a 60 points. So you could look at an extension from this level of 60 points, meaning like $140 would be the target over a series of weeks and months. So right now, we're pressing on this trend line again. We're off of the support level. So to me, it looks like we're more likely to break here. We have earnings coming up on the 6th. That's obviously going to be the catalyst. I shouldn't say obviously because it hasn't been the catalyst in all this period here, but that could be the catalyst that moves it higher. If you look at this on a daily, let's go over here. We're above 3 out of 4 of the moving averages, right? Well, actually, as of today, we're just back below one. So we're above the 21, we're above the 50, we're above the 8. We just are working off the 200. So as it sits right now, I feel like upside is more likely. And so that's the way I lean. So that's how I see this chart. But I get it. People might look at it a different way. But this feels like a really solid level. I mean, holding this so many times. Now, what I will say is if we do lose this, if we definitively lose this, then yes, it's probably going to be a fast trip down to this area. But right now, I would say 60-40, maybe 70-30. I feel the resolution is going to be to the upside. But we will see as we get closer to May 6th if that's the case. All right, let's go through all the charts, shall we?